Svenska Blankare har skördat många skalper och triumfer den senaste tiden i Stockholm. Samtidigt är blankningstrenden på reträtt internationellt, det säger Mark Hiley som driver analysfirman The Analyst. Mark, it's good to be with you again. I believe we talked about a year ago. And since then, it is my understanding that the broader trend has shifted away from short selling to a preference toward long investing. What are your thoughts on that as a profiled analyst covering both long and shorts?
Yeah, thanks for having me. Yeah, so last time in London, we had a long conversation, didn't we, about shorts? And I think there's a few things we observe now amongst the client base. So first of all, the US investors are coming back to Europe. Definitely over the last year, we are speaking to more and more people based in the US, running global funds, who are getting inflows into their own funds, often value funds, maybe on the West Coast, and are increasing their allocation into European equities. And I guess if I was to maybe try and put some numbers on it,
Yep.
if you said, the typical global US investor maybe 10 years ago had 30% in European equities, that's probably dropped towards 20.
Mm-hmm.
You had Brexit, COVID, the war in Ukraine, even before that, the crisis in the European peripheries. And over that period, the American investors pulled out of European stocks, put more into their own tech winners. But in the last year, we've seen it coming back. So if you think about, if you think a fund reallocates from 20 to 25% in Europe, that's a massive amount of capital to be deployed back into European stocks.
That sounds like quite a significant factor and a big positive for European stocks after years of being in second place.
Yeah, it should be. It should be. So particularly the small and mid caps have had outflows, like structural outflows, because the money has gone into passives and the number of active fund managers has reduced in Europe. So there's been outflows from those stocks, and that's probably been a headwind to the stocks doing well. If that money comes back, there's going to be more price discovery. There's going to be more momentum in the market. At the moment, it's focused on the large caps. So that initial wave of money is quite thematic. People are looking at electrification, energy networks, German defense spending, software, and putting money back into the large caps. But I think inevitably it begins to flow into the mid caps as well, and that would be positive.
I would like to get back to electrification. It's an interesting theme, but I started with discussing short selling. We talked about that as a phenomenon last time when we met in London. A few shops has closed down in the last 12 months or so. Do you feel a shift among your clients, among investors? Are they more interested in the long cases now?
A little bit. So the readership of our long cases is now higher than our short cases, which is quite a change for our business. And we speak to over 100 institutional clients. So it's quite a good barometer of market interest. I think one observation is the number of people doing shorts in London, across Europe. Actually, the number of people doing shorts everywhere has fallen. For sure, there is fewer short analysts, short focused hedge funds than there was 5, 6, 7 years ago. There's probably there's maybe a dozen people in London doing really deep work on shorts. And I think 5 years ago, that would have been 30 or 40 people. So there's been closures of short-only funds. It's been a bull market as well. You know, the market's been going up for 15 years now, other than a blip in COVID and then with the tariffs in April. So I think there's a lot of fatigue on the short side of things.
I wonder, it's a bit of a philosophical question. We have many highlighted shorting cases in Sweden and quite a harsh tone. Some of the companies that are being questioned by the shorts have responded quite aggressively. Fans on internet sites are attacking short sellers, and journalists for that sake too, quite aggressively. I wonder if the internet or the tone of conversation or the Reddit crowd could be a factor in people being less interested in shorting.
Yeah, a little bit. I think that's definitely more the case in the US. So in America, there is much more active retail participation, although Sweden has a very active retail investor base as well. So in the US, on a lot of stocks, like starting with those meme stock squeezes on GameStop and things like that, AMC Cinemas a few years ago, the US has been like a very, very dangerous market to have any shorts in, because even some of the most dodgy companies, the share price has gone up because of a retail participation. So I think the institutional investors have been scared off shorts in the US. That's definitely a bit less the case in Europe and in Sweden. And I think the number of people doing those public short reports has declined. The number of public short reports it's slowed down, right? There's one or two a year now. And the companies have kind of come back very hard against some of those reports. And I don't know, maybe the authors don't want the unwanted attention, or they think there's easier ways to make money. And obviously the language of those short reports is often very aggressive itself. So it's a somewhat risky game to be calling companies frauds or zeros or alleging management mispractice. It's only for a certain type of individual with a certain personality. And it's not something we do, but that may play into it as well. But I think it's just overall, like, the market goes up in general.
Yeah.
So the return on time on shorts is not great, and there's fewer hedge funds doing long short than there was 5 years ago.
You run a research firm. You publish both long and short analysis. You never let me read them, which is unfortunate. But
I know you try really hard.
I know you're reluctant to talk about individual names too much, but I'd like to discuss Swedish market more broadly to start with, and then we could perhaps touch upon a few names. We talked about electrification, and ABB is obviously at least a partial Swedish name.
Yeah, so I was in Milwaukee last week at the ABB Capital Markets Day. And that's been the name we've been interested in for a number of years, positively inclined. And they are one of a small number of European large cap industrials who are really benefiting from, number one, data center investment. So they're selling products directly into data centers where there's an investment boom, as everyone knows. And secondly, the grid electrification. So everything becoming electric. And the European grids are so old, they've been underinvested in for decades. So there's a lot of catch-up investment now. And ABB is selling a lot of products which fit that electrification theme. There's another big one in France called Schneider, Legrand. Then you have the cable companies like NKT. In Denmark, Siemens Energy, who are selling gas and power technologies in Germany. But that's quite an interesting area of the market. And ABB were definitely giving another positive message on the outlook for electrification demand. And also they've had a good self-help story over the last few years as well.
We like NKT in Sweden too. They have a lot of manufacturing in the south of Sweden as well. A very interesting case. You've been following Swedish markets over a number of years. I know you're quite interested in the compounders, the acquisition companies more broadly. Any thoughts you can share on that sector in Sweden?
Yeah, so we're interested in all the Swedish roll-ups, like let's say the organic plus acquisition compounding, have a good share price, raise some debt, buy a lot of companies. It's obviously a very active area of the market in Sweden, and there's been some spectacular successes. I suppose Hexagon for 20 years under Ola Rollin was considered a very successful roll-up. And then there's been some less successful cases. I always struggle to pronounce it, but Storskogen.
Storskogen, that's good.
Storskogen, that they struggled. And I suppose companies like Cinch was a bit of a roll-up as well, wasn't it? You had Nibe, which has come under pressure as the heat pump market has collapsed. They've been very acquisitive in the past. There's lots and lots of these roll-up names, some good, some bad. And we're always interested in them because there's often a lot of excitement around them. They often deploy capital very quickly. It's sometimes hard to work out what the underlying growth of the business is. And then obviously an aggressive roll-up structure, if it doesn't work and it takes on too much debt, they can run into a lot of problems. So I know you've always been interested in Embracer. That's probably one we can talk about. We covered it as a short a few years ago, not so now. But that's an example of an aggressive roll-up, which eventually had to be broken up again and restructured. And even Hexagon is breaking into two. So they're spinning off this software business, Octave. So yeah, massively interesting area of the market for us as analysts.
Many interesting companies, and some of them are now in a restructuring shape, hopefully getting a nice cleanup and coming back as long cases. Who know? I believe you've been quoted as having covered Evolution in the past. Evolution is an interesting case, kind of a tug of war between regulatory risks and a low valuation, and a pretty interesting history. Anything you can share on that?
Yeah, fascinating case. We've been close to it for a number of years. You framed it correctly. As of today, there is a tug of war between some very hardcore long investors, people who think it's extremely cheap, it's still extremely profitable, and it's still extremely cash generative. And there's even a US value investor in there who I think has bought, at least 15% of the company, Kenneth Dart.
Of course.
So there's definitely some big value investors in there. On the other side, from a short or a negative perspective, we can see people with disclosed shorts, and that's really relating to the level of their activities in the Asian markets. So to what extent is Evolution selling indirectly into Asian gaming markets where there's no regulatory framework, or even, gaming is not allowed? I think also what we've seen recently is more discussion about the competitive dynamics for Evolution. So what's happening at Playtech and Pragmatic Play. And, Evolution was obviously the biggest and the best in the space for years and years. First mover, scaled up, big studios, good products, lots of growth. But when you make such high margins, you attract competition. So that's a more recent debate, which perhaps goes beyond the regulatory and the legal debate, which has been going on for a year. Obviously, the stock's down, and it does look cheap. But I think it's probably a question of where will the business be in 2 or 3 years' time, rather than today's valuation.
It's a very interesting topic. I could stay on it for hours, but I want to move on to one last Swedish company. Bonesupport was brought up at an investors conference in London. A colleague of mine covered Mr. Matthias Tern, who is now with Brummer and Partners, had a talk about this company. There's many short sellers. It's definitely been a hyped company. It's an interesting technology for sure. Any thoughts from your side on that one?
Yeah, so we had people at that conference last week. It was a Sohn conference in London. And you normally have 12 fund managers pitching their own ideas. I think it was mostly longs, but as you said, Brummer and Partners talked about Bonesupport. We've looked at it now for a couple of years. I think it's maybe a case where the market cap got very big. The expectations were very high. Perhaps people thought they could grow at 40 or 50% forever. And obviously, he's bringing some questions into the debate about what's the extent of the use cases, how strong is the clinical evidence. I think he also talked some more about the accounting, the FDA approvals, the reimbursement codes. So it was one which I guess was a really, really hot stock for a while, got to a very, very high valuation and a very high market cap. The stock's halved, and now there's obviously some debate about how big can the market be, and can there be competition? And I think that's the exciting thing about the Swedish market, right? There's always a hot stock. There's a lot of innovation. There's a lot of growth. But then if that stops, often these companies attract attention from the short side.
Lastly, we're in a bit of a week of market turbulence right now. When we're having this conversation, I think markets are indeed up. But does that matter to you? I know you look at individual companies, but is it more lucrative? Is it better for you in a turbulent environment? Is it harder when everything's going up broadly?
It is perhaps a bit. Half our ideas are longs, half are shorts. Obviously, the shorts are difficult when the market goes up all the time. That said, we're not just paid by hedge funds for shorts. We're paid by long onlys who are interested in risk protection, or avoiding bubbles, or avoiding accounting and governance problems. So we don't really care too much about the overall market conditions. All our ideas, we're trying to think on a minimum 2-year view. So we're looking for stocks that can double or halve on a 2-year view. So we do try and remove ourselves from the noise. But what we're seeing at the moment is like a lot more volatility, bigger intraday moves, lots of macro positioning. Obviously, all the hype around NVIDIA doesn't just affect the AI sector and the electrification sector, it affects like the whole market sentiment. So it's a pretty exciting time to be in the market, but we try and switch off a bit from the noise.
Mark Hiley, it's always a pleasure. I'm gonna tempt you with one last question. I believe you might not want to answer, but do you cover NVIDIA? And if so, what's your recommendation?
Wish I covered NVIDIA.
Always a pleasure, Mark. Good luck with your work and be in touch.
Thanks very much.
Thank you.
Bye.